What's up, everybody? Nate here, and President Joe Biden is losing it. I mean, literally. I saw some poll numbers come out today, and President Joe Biden is currently polling well under where he should be for the next potential presidential election. Now, we don't really get political on this channel. I don't really talk about politics a lot, and I am not talking about politics today. But with President Joe Biden essentially tanking in the polls for Democrats and Republicans, it's important to know what could be coming next for the future of our economy because, like it or not, the federal government chooses a lot of the things about our monetary policy, and they have influence over the Treasury and Federal Reserve. And if we're going to see President Joe Biden continue to poll low and our economy head into a recession, then that could mean some drastic and major changes for the future of our economy, not only this year, but in 2023, 2024, and beyond. But first, I want to talk about why people are starting to get on Joe Biden's case right now. So if you haven't looked around our economy, it is kind of in shambles in 2022. Americans are spending a whole lot less money because, one, they are making less than they did in 2020 and in 2021 because of things like inflation. Not only that, but it's really hard for a lot of Americans to do the things that they want to do because entertainment and travel is getting a whole lot more expensive on top of regular everyday inflation. According to a report by CNBC, 65% of Americans are cutting back on entertainment. 61% are driving a whole lot less, and that one is really difficult because many of us have to drive to work every single day. 54% are reducing their travel time in the United States, 41% are reducing their spending on groceries, and 32% are increasing their credit card usage. Well, what exactly does that mean? Well, Americans are getting hit where it matters the most, in their wallet. Like I said at the end there, Americans are starting to increase their spending on credit cards. Over the last few months, we have seen credit card spending explode in the United States, and that is because of things like inflation, and Americans have taken on a lot of debt, and one, need to spend that money to buy the things that they need, or two, they have a standard of life that they want to keep up. This is something that has gotten increasingly more complicated as the United States has introduced stimulus and incomes started to rise in 2021, but the problem is incomes haven't really stayed there all throughout the United States. So to kind of backtrack a little bit, in 2020, we obviously had the biggest parts of the pandemic. Now, what came with that is lots and lots of government stimulus and really low interest rates from the Federal Reserve. This meant that money was really going to be circulating throughout our economy very easily. People could go out and spend because not only were interest rates low, but the federal government was literally giving people thousands of dollars in stimulus. And on top of that, we had extended unemployment benefits and a lot of mandatory payments for student loans, and your mortgages and rent and a lot of other things were paused for a very, very long time. So Americans were raking in a ton of cash so they could go out and spend, but the problem is now we have a whole bunch of inflation in 2022 because there's a whole lot of money existing in our economy. Now, by definition, inflation just means that the monetary supply of a country is going up. So that means that a country is starting to print a lot, and the United States has printed a ton of money over the last 2 years. At the start of 2020, we had around $3 trillion in circulation, and today we have over $20 trillion. That means that people have been going out and spending a lot of money, but like I said before, this can become very problematic if you're overspending. A lot of Americans weren't taking into account that student loans and mortgage payments are going to come back, and eventually you might spread yourself too thin by getting a brand new car or overpaying for a house. That means that Americans are now turning to credit cards, and with that debt increasing, they can't simply go out and buy all of the things they could before. Not only that, but businesses in the United States are starting to get hit hard too, and this is mostly due to the Federal Reserve reversing a lot of its monetary policies. Remember, interest rates in 2020 and pretty much throughout 2021 were at 0%. This meant that businesses and people alike could go out and get debt. They could get a loan to finance pretty much whatever they wanted. You could borrow money very easily, which means you could buy things very easily. While it is very simple to understand what that means for the everyday American, you can go out and get a house and save hundreds of dollars on your mortgage payment. It's a little unclear what that means for businesses. Now, what a lot of businesses, whether they're private or public, do is they take on debt in order to grow. They get a lot of investor liquidity and they get a lot lot of investor money from things like banks. These businesses end up taking out loans, or investors end up taking out loans in order to better businesses. So that way these businesses can expand as fast as possible, and it's not seen as such a risky investment a lot of the times because investors are putting in so much money and these businesses are pumping out so much more money. So they're making all of their money back, and it's not really a problem. But in 2022, it has become a problem because the Federal Reserve is starting to raise its interest rates. As those interest rates go up, all of that debt becomes a lot more expensive. And it means that future loans are not going to be taken out for banks and financial institutions and these businesses, meaning that all of these businesses that are starting to grow have to really slow down. Slowing down is bad for our economy and GDP. You want to continue to grow so that way the entire economy can grow. You can employ more people and there is more money being created all throughout the country, but you can't have that with really strict monetary policies and raising interest rates. But the Federal Reserve knows there's way too much money circulating throughout the economy, so they have to cut that back. Now, I went on a little bit of a tangent there, but what exactly does this all mean in the context of President Joe Biden? Well, a lot of Americans see President Joe Biden as the root cause of a lot of these issues. He is the person who is in charge in the United States, and even though he isn't directly in charge of our inflation problems or the Federal Reserve, he, like I said, looks like he's in charge, so he's going to get blamed for pretty much all of these disasters. 52% of Americans do not believe the economy is going to get better in the future. They believe that it's going to continue to get worse until we're in an outright recession. Now, we don't technically know if we're in a recession just yet. The Federal Reserve came out with an estimate just the other week, and they were talking about how, yeah, in Q2 2022, we definitely were in a recession as the economy contracted by a little over 1%. But as of right now, we don't have the official numbers, but you got to remember a lot of other things can track a recession. It's not just economic GDP. You have to look at the things around you. You have to look at businesses, and you have to look at how Americans are continuing to spend and what consumer sentiment is. All of these different things are going to kind of give you alarm bells on whether you are in a recession or not. It's not just the raw data. You have to look at the whole picture. And if you look at the whole picture, consumer sentiment continues to drop in the United States. And like I just said, 52% of Americans believe that we're going to see a recession sometime soon. Some states in the country have already had their primary voting periods, and other states are about to have them within the coming months. This is going to be very important for legislation in our country, and it is going to determine the road that the United States takes in the future. President Joe Biden has said a lot of different things and has proposed a lot of different things for monetary policies in the country. For one, President Joe Biden wants to institute a tax holiday. So he wants to cut off all of the taxes for selling gasoline in the US or selling oil. That would essentially bring down the price of oil, but a lot of experts and investors have warned that this could also bring up the price of oil because with the price going down, then a lot more demand is around it. So it's a short-term solution. This has been given to Congress, and now they have to kind of create a bill around it. Not only that, but you have the Build Back Better bill, which could improve a lot of the United States social spending and infrastructure. And on top of all of that, you have the recently passed infrastructure bill from President Joe Biden. Once again, I'm not getting political here. I don't really care either way on how these bills go, but I care about the finances of our country. And a lot of people have been talking that one of the ways that we can get rid of this inflation problem is by working on our supply chain, so improving them. But this is kind of a chicken or an egg situation, right? Which one comes first? In order to fix our supply chains, well, the United States is going to have to spend money. It's going to have to print more money in order to improve these supply chains, which is definitely something that they can do. And in the short term, that will definitely help us. But remember what I just said about printing money. The more money that you have in circulation, the higher inflation is going to go. So I have not yet seen what the total would be to kind of fully improve supply chains in the United States. But if that is something that we were to do, then, well, there's a potential that inflation could rise even more. Why that matters today is because if you have a certain part of Congress that is better with voting on something like that, well, then right now is the time that people are going to go out and vote and choose these Congress people. Representatives are going to go either way, and there's also been talk of more stimulus checks in the United States. California, for instance, pretty much much has made this law over the past couple months. They have a surplus of money in their economy right now, and they're planning on giving a lot of that money back to their citizens. Depending on how it goes and how much is actually given back, well, that could just make inflation go up even higher, but it could end up helping people in the short term. So it really just depends on what your ideologies are and what your overall game plan is. But like I said, this is going to matter for the future of our economy, and it's going to matter for the number one thing that most Americans worry about: taxes. President Joe Biden has a lot of tax proposals. He has to, because he's trying to figure out new and creative ways to pay for all of his programs. Right now, it's kind of a hard sell and something that he's put on the back burner because we have this inflation problem and an economy that could potentially go into a recession. But if President Joe Biden is re-elected, then a lot of these tax implications could be put on millions of Americans. And it's not even if Joe Biden is elected, it's if somebody else is elected. Right now, we know what the tax laws are, but the next president or the next members of Congress could ultimately change that. Meaning the way that cryptocurrency and real estate and capital gains work for the stock market could eventually change over the next few years, depending on who is elected president or who we elect into Congress. But when I saw this article from CNBC about Joe Biden's polling numbers going down, this made me really start to think. I did some research, and there has only been one other president in American history that was elected during a recession. If a recession happened about 2 years or so before the election date, well, then that president was not re-elected. And if we are not in a recession right now, and like I said, I really hope that we're not in a recession, but even if we're in a technical recession, well, that means that President Joe Biden's chances of getting re-elected are slim to none. And that could have huge implications for our tax system and our economy and jobs and our supply chains. President Joe Biden can't control everything in our economy. He only has so much control over certain things, but at the end of the day, he has proposals that he wants to get through. Every single president has an agenda, and they want to bring the United States out of a recession. This has been one of the biggest problems that we've talked about on this channel over the last year or so. President Joe Biden and Chairman of the Federal Reserve, Jerome Powell, want to do what is necessary today in order to fix inflation, even if that sacrifices our country's tomorrow. What I essentially mean by that is in 2020, we had trillions of dollars printed. The chairman of the Federal Reserve was Jerome Powell. He still is today. President of the time was Donald Trump. Now, that presidency and that Congress decided that they wanted to print trillions of dollars to get the United States out of a recession and to stimulate our entire economy for years to come. The problem is, while that helped in the short term and it brought really explosive GDP, now we are facing a lot of these inflationary pressures, and a lot of people don't see it as that Congress and that president's problem, because right now, Joe Biden and we have this Congress, and people see it as their problem. With an election coming up, well, President Joe Biden doesn't want to lose his job, and neither does Jerome Powell, even though Powell was recently just renominated and reelected into the chairman of the Federal Reserve position. Well, he doesn't want to be voted out or kicked out of that spot. Same with the president. Now, they want to do whatever they can to keep the United States out of a recession, but that might be at the cost of doing what is actually necessary. They don't want Americans to hurt, and they also don't want to lose their jobs. So at the end of the day, we could see some reversals in monetary policy. Right now, our monetary policies in the United States are very strict, and the reason for that is because the Fed is fighting inflation. They can't grow the economy and fight inflation at the same time. They are complete polar opposite. A growing economy means that you're printing money, and there's a lot of money circulating around. Inflation means that, well, everything costs a whole lot more, and people can't buy as much because of that. So they have to focus on one thing over the other, but a lot of investors have been talking about that the Federal Reserve may end up lowering their interest rates way too early because they want to be the good guy for the American people. And And this is something that President Joe Biden may support in the short term. He may say that the entire economy is starting to expand, when in reality, we are starting to face really high inflation again. Anytime you turn the money printer on, it's going to be great for a couple months, but in the long term, you're going to have really bad problems. And I want to be completely clear here. This is not a President Joe Biden thing or a Jerome Powell thing. This is a systemic problem with our political system in the United States. Just about every single president and every single Federal Reserve chairman has gone after these easy money policies to do what is easy today. The problem is you can't continue to do that forever, or else it's going to become a much larger issue, and it looks like we're headed towards that direction in the future. None of this is set in stone at this point, but that is where you and your finances come into all of this. So the moral of this video is not to tell you who to vote for, and it's not to tell you that everything is going to get worse in our economy. What I want you to know and what I want you to do is to be prepared for whoever wins these elections and start paying attention to the monetary policies of the Federal Reserve and the proposals from the United States president. All of this matters because, like I said before, Americans are struggling. It's hitting their wallets, which means it's hitting your wallet too. Everything looks like it's heading in one direction right now, but that could easily change depending on how these primaries go and depending on if Joe Biden's approval rating continues to go downwards. So be prepared for all of that. Be prepared with your investments and your finances. Because if things continue to go downwards for too long in our economy, well, the Federal Reserve and the president and Congress are not going to like that, and we could see some short-term fixes that could cause some long-term problems sometime soon. But now I want to hear from you on this issue. What do you think about President Joe Biden, Joe Biden's economy, and his current approval rating? Do you think that this Federal Reserve and our president and Congress are going to do what is necessary in order to grow our economy and bring down inflation? Or do you think that they're going to take the easy route and they're going to grow our economy and increase inflation because they just want things to be good for today? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.